Hi, good morning. Today we are going to continue with our series on US tax concepts, and today we are going to focus on the bird's eye view of Form 1040. It will be kind of introduction to Form 1040. We won't be going into much detail of each and every component or the items, but the idea today will be basically to get ourselves familiar with the Form 1040 and have the knowledge and introduction to the main headings of all the items which are shown on the face of Form 1040. The idea behind this is that once you have the knowledge and the awareness of all the components, the items that are shown on the face of 1040 and the related schedules which are connected directly to Form 1040, you will have a much better understanding of the provisions when you actually read about those provisions. Normally, what happens is, as a new person who is new to US tax, when you read about certain provisions, certain credits, or certain items, we normally get confused that we are in a doubt that actually where these items will be shown and what are the use of it, how it is going to affect our return in practicality. So without wasting time, let's start off with Form 1040. Like any other income tax return Form 1040 also starts with identification of the taxpayer, and then it talks about the income. What we'll do is we'll grow slowly. Initially, we'll talk about just the headings. In the next slide, we'll talk about certain more details of those headings. And then we'll try to memorize things. We'll try to see that, okay, this is the structure of Form 1040. At the end, what we'll do is we'll have a look at the Form 1040 in original, and we'll try to establish a link between the headings of the form and all the discussions which we are going to do in the next 2 3 slides. So start off with the form starts with income. Then there are certain adjustments applied to those income. These are similar to the reductions that are given in Indian income tax returns. So kindly don't establish a link between your other laws, other tax of other countries with US. When we are studying US tax, kindly focus on the terminologies and the meaning as related to the US tax only, right? So there are adjustments applied to this income. When you reduce these adjustments, you get the star of the show, adjusted gross income. Simply calling star of the show because a lot many things in US tax is directly related for an individual is directly related to the AGI limits, right? So abbreviation is AGI and it's a line 11 item on Form 1040. After this, you again apply certain deductions. At this stage, these are called as deductions, not the adjustments, right? So these are called as deductions. And after these deductions, what you get is the final taxable income. To this taxable income, you apply certain tax rates as per the tax slabs prevailing in that tax year. In United States, the tax year commonly is the calendar year. It's not like Indian income tax where is the fiscal year from April to March. Commonly, it is the calendar year, and of course, there are provisions where a company or an entity can adopt a different tax year, for example, a fiscal year or any other year, for as per its convenience and as per the provisions of the law. So we'll talk about the calendar year only. So this is the taxable income, and you apply gross tax, the tax rates to this taxable income as per the tax rates slabs available for that particular tax year, and you get the gross tax liability on this taxable income. This gross tax liability, on this gross tax liability, you apply certain credits. If you're not aware about the credits, this is the part 2 video. In the part 1 video, I have talked about the concepts, basic and nature of 3 items: refundable credits, non-refundable credits, and the payments. So kindly look at the video. I'm not going to have a detailed discussion again or any kind of discussion over the credits again right now in this video. So kindly, if you are not aware about the concepts, and even if you know about certain credits, but you are not clear about the nature and the concept and the differences of the credits, kindly have a look at the video, the part 1 video that is specifically on this concept, right? So on this gross tax liability, you apply certain non-refundable credits and then you get the net tax payable. To this net tax payable amount, you match this net tax payable amount with the payments which you have made or which are considered to be made by you by the US government. And after these payments, and why I'm saying considered to be paid by from your side, again, this concept is discussed in the part 1 video, but to just give you in a nutshell that there are certain kind of credits which are called as refundable credits, which are allowed as a deduction from your net tax liability, even though you have not paid actually any amount to the US government. Those credits reduce your net tax liability, right? And in case your refundable credits are more than your net tax liability, you are actually eligible for a refund from the government because those credits are considered as payments from your side, even though they are not the actual payments. This benefit is not available in the non-refundable credits, right? So what actually happens is to net tax payable, when it is compared with the actual payments from your side, the final amount which you get is either the net tax due or the refund available to the taxpayer, right? This is the overview of the headings. Now we shall talk about the details of each heading, a little bit of details, very small. For example, when we talk about income, where are actually income shown? The incomes are directly shown in as per the headings in Form 1040. But because you cannot have all the incomes, all the type of incomes and all headings in the form itself, otherwise the form on the face of it will become a bulky document. So what happens is there are certain schedules in which other details of other incomes are mentioned, and the total of those incomes are finally brought onto the Form 1040, right? So the incomes are shown on the face of certain incomes, very limited incomes are shown on the face of Form 1040, and other incomes are brought as a total from a different schedule known as Schedule 1 in its Part 1, right? Now, to this income, what you do is you apply certain deductions known as adjustments, right? These adjustments are actually deductions which are presented in Schedule 1, Part 2. So, the Schedule 1 remains the same, but the Part 1 talks about the income, certain other incomes, and Part 2 talk about the deductions which are called as adjustments and that are available from the income. What to get? To get the adjusted gross income, the star of the show, right? These adjustments here are known as above the line items, above the line deductions, right? Why? Because what is the line here? If you remember, after these adjustments, what you get is adjusted gross income AGI, which is presented at line 11 of Form 1040. And this is the line, right? So because the adjustments are shown above this item, they are known as above the line adjustments. And to this AGI, you apply certain deductions, which are known as deductions at this stage. And these deductions are of two types. Now, as a professional, you should be able to interpret things, and even when you are making notes, you should try to summarize the notes in the shortest form possible, but by which you can actually interpret things while reading. As you can see, I have written in deductions below the line, below the AGI, I have mentioned standard oblique, right, forward slash itemized. That simply means one of the two. You cannot claim both the deductions. Either you can claim a standard deduction or you can claim a itemized deduction. Now, what are these deductions? You'll be studying detail when you go in deep about the topic or when you go through the course of part one individual of enroll agent or CP or whatever. But right now, we are not going to get into deep into it. Just that below the line, the deductions are of two types. At the first part, what we are doing is we are making a choice between the standard deduction and the itemized deduction, right? Whatever is beneficial for us, we'll take that deduction. And what do you mean by and? And means cumulative. One of these two and 199A qualified business income deduction. If you fulfill the conditions of these deductions, you will get additional deductions of this type, 199A QBI. An abbreviation is known as QBI, right? Now, this deduction is known as below the line item, right? Now, one thing you have to remember, for example, if somebody wakes you, these things you have to remember uh, at instance. For example, if you are sleeping and somebody wakes you up, hey, what's your name? You will call, instead of your name, you should remember AGI, right? Where you are positioned, where you are living at line number 11, right? And what is above the line items, adjustments, and what is deduction called below the AGI? It's below the line item. You should remember all these things before your name, right? Before your identity, if you are a US tax professional. So, right? So, when we talk about AGI, remember it's a line 11 item. Any deduction above AGI is above the line deductions, and any adjustments or deductions below the line is below the AGI is below the line deductions, right? Then, after these deductions, what you will get is, of course, the taxable income, right? To this taxable income, what we did was we applied the annual or the tax rate as per the slabs applicable for the particular tax year, and we get the gross tax liability, right? This tax liability is shown on the face of 1040, and certain other tax payable due to certain other laws, other provisions, which are not directly related to the taxable income, are also shown in Schedule 2, right? And of course, again, the end clause, apart from the regular tax on taxable income, other taxes mentioned in Schedule 2. You have certain other provisions of tax like PTC. You don't need to remember right now. Again, it will be going deep into the topic. So these are certain other payments. Kindly ignore that right now. These are also added to the tax liability. To this tax liability, what we do is we apply certain credits, tax credits. At this stage, they are known as non-refundable credits, which are mentioned in Schedule 3. After this tax credit, what we get is the net tax liability, right? This net tax liability is compared with the payments, that is the actual payments made by the taxpayer, and the assumed payments like the refundable credits. The actual payments can be in the form of taxes withheld, the estimated tax, etc., and the assumed payments, as I just said, that is these are the refundable credits. And what we get is either the net tax due or the refund amount due to the taxpayer. So let's just recall once whatever we did in this slide. This is the very important slide to have that bird's eye view which I was talking about initially. First of all, every 1040 income tax return form starts with income. And income in US tax 1040, the income is mentioned on the face of form 1040, plus it is also mentioned in Schedule 1 Part 1, right? Because you cannot have everything in the face of the form 1040. Then you apply certain deductions which are called as adjustments. Remember, you won't be using the word deduction at this stage. You will be using the word adjustments. So certain adjustments are applied, which are mentioned in Schedule 1, Part 2. And these adjustments are known as above the line adjustments. After this adjustment, what you get is the star of the show, the AGI, the adjusted gross income, which is mentioned at the line 11 of Form 1040. Normally, you don't have to remember any of the line numbers right now, or even into course, or I think in your professional period, what will happen is because of regular filling of the forms, you remember the important lines. That's not a material event. Right now, you need to remember, even at academic level, the line number of this adjusted gross income, that is line 11, right? After this adjusted gross income, what happens is you apply certain other deductions. These deductions are of two types. At first, you have to make a choice, a beneficial choice between standard deduction and the itemized deduction. And then if you fulfill the condition of QBI, you get an additional deduction under section 199A, that is called qualified business income deductions, right? These deductions are known as below the line deductions. Because of the deductions, what you get is the taxable income. Now, to this taxable income, what you apply is the tax rates as per the slabs applicable on that particular tax year. But also, here, some other taxes are also shown to be payable by the taxpayer, which are due to certain other provisions of the law, right? And there are certain other items which we are not going to talk about right now. And then, because of these tax liability, what you do is you apply certain credits to here at this stage, which are known as non-refundable credits. And after these credits, as mentioned in Schedule 3, and after these credits, what you get is your net tax liability. To this net tax liability, what you do, you compare the payment amount with this net tax liability, and if there is extra tax due or the refund available to the taxpayer, that are shown as the final balance, right? When you talk about the payments can be in the form of actual payments, that is the taxes withheld, estimated tax, etc., or it can be assumed payments, which are due to the refundable credits provided by the US government. Now let's have a look at the Form 1040 directly. You can see this is the first half of the Form 1040, and this talks about the details, the identification of the taxpayer. Right now, if you are new to US tax or you have not studied the Part 1 individual, what will happen is everything will be strange for you. For example, if we start off, you can see the filing status. There are five kinds of filing status. Then you can see the details of the taxpayer, his spouse, his or her spouse, right? You have digital assets like NFT, cryptocurrency, right? You have to mention things about here, make a disclosure here. Then you have standard deductions. There are certain requirements of dependents. You have social security number here. So everything is new for you. But if you can see that everything here talks about the identification and certain declaration from the taxpayer, that's it. It's not talking about the final tax liability or the income or anything else. Now we move on to the second half, and we should have a proper look here on this form. You can see this, it starts off with income. And there are certain line numbers given 1A, B, C, D. These are just the line, subline items of that. Let's not talk about the items mentioned at the leftmost part of the slide. That is things which are written below income, right? Let's not talk about that. We should talk about the headings of the incomes, and those are more relevant. Again, we are not going to dig deep into each and every item. We'll ignore many of the items. If you have studied tax, Indian tax, or any other tax, I suggest you, in fact, anybody else will suggest you not to relate the headings of income as per Indian income tax or any other country's tax with US tax, right? Every country has a different law, has a different way of presenting things, has a different way of calculating things, right? So don't, for Indian CAs especially, or those who have background of Indian tax, kindly don't relate anything related to the five heads of income with US tax. Because in US tax, in this form 1040, you will see that everything is merged up, right? There is hardly any bifurcation. It's simply about all the incomes. If you can see from line 1A to line 9, you can see salary income, you can see interest income, you can see other kind of incomes plus capital gains and everything there, right? Each and every income for those who are studying part 1, each and every head is covered in your part 1 individual. In fact, I can say 99% of the heads are covered, right? So you don't have to worry about it. But if you remember these headings at least, what will happen is when you'll study in actual course, you will be able to identify, okay, this is the income, this is the heading which is shown at that place in Form 1040. It actually streamline the process. You will have a proper structure in your mind, even when you will be studying the academic part of the part one individual, right? So till line 9, you can see till line 8, you have all the incomes mentioned, other income, interest income, salary income, etc., capital gains, everything, right? If you notice at line, I'm not going to talk about each item or even discuss from 1A to 6C, right? These are separate topics requiring separate discussions. But giving a bird's eye view of this, you can see line 7 talks about capital gain and attached Schedule D, right? So Schedule D talks about the capital gains of a taxpayer. Then you have 8 other income in Schedule 1. We just discussed in above slides that there are certain incomes which are mentioned in Schedule 1, where part 1, right? So the total of that other incomes are mentioned here. Then you have adjustment income, line number 10. You have adjustments to income from Schedule 1, where Schedule 1 part 2 will have the adjustments or the deductions above the line. And then at line 11, you have adjusted gross income, the AGI at the start of the show, right? Line 11. Now look at line number 12 and 13. They talk about the deductions below the line. You can see at line number 12, you have a choice, standard deduction or itemized deduction as per Schedule A. Schedule A specifically talks about itemized deduction. And then you have to make a choice for the taxpayer that whatever is beneficial for the taxpayer. So if it's, you have to choose from standard deduction or the itemized deduction, and you get one item there. And then if you qualify, if you comply with the provisions of section 199A, you become eligible for another deduction of QBI, known as QBI, Qualified Business Income Deduction. And after availing these below the line deductions, what you get is your taxable income mentioned in line number 15. Now, after getting this taxable income, let's move on to the next section, page 2 of Form 1040, which talks about tax and credits. If you see closely, line number 16 and 17, what do they talk about? Line number 16 talks about tax. What kind of tax? The tax as per the applicable slab rates applicable for that particular tax year on the total taxable income, which we calculated on line number 15. So line number 16 talks about the simple tax as applicable for that particular tax year according to the slab rates. That's it. Line number 17 talks about some special items like we talked about in previous slides, some other taxes as mentioned in Schedule 2, but specifically line 17 talks about those items which we have ignored for the time being. For example, alternative minimum tax, AMT, that is almost similar to the minimum alternative tax as applicable in Indian taxation, and certain PTC payments. Let's ignore that for the time being, right? And then what you get at line number 19. Line 18 is simple total of line number 16 and 17. Line 19 talks about child tax credit. It's a special type of non-refundable credit. And then line number 20 talks about the other non-refundable credits as mentioned in Schedule 3. Now, why child tax credit is actually shown separately and apart from the other non-refundable credits as mentioned in Schedule 3, that we will be talking about in the video 3, where we'll be talking about the calculation aspects of child tax credit and additional child tax credit. There is some difference, right? That's why. To give you an idea about it, that a portion of unused child tax credit is also available as a refundable credit to the taxpayer, and this facility is not available for remaining non-refundable credits, and that's why these two credits are mentioned separately at line number 19 and 20. So let's summarize. In this section, tax and credit, first it talks about tax, certain kind of tax Then it talks about certain non-refundable credits. And then again in line number 23, it talks about other taxes as mentioned in Schedule 2. We have discussed about these other taxes. There are certain other taxes which are applicable to a taxpayer due to certain other provisions of taxation laws. These are mentioned at line number 23. Now the point comes why they are mentioned after a certain kind of non-refundable credits, and this we'll be talking about when we'll be talking about the calculation aspects of child tax credit and additional child tax credit in video number 3. But to give you an idea, because of the simple reason that out of these taxes, none, no kind of non-refundable credits are allowed as deduction, right? And that's why they are shown after all the non-refundable credits. Now, when we do everything in this section of tax and credits, what we get finally at line number 24 is, yep, the taxpayer's total tax liability, right? So this tax liability is, you can say this is the net tax liability, because at line number 16, all the taxes are already calculated, and then you have non-refundable credits, and then you have additional taxes which on which no refundable non-refundable credits are allowed. So what you get is your net tax liability at line number 24. And the next section talks about payments. Now kindly focus. If you have already seen the part 1 video, we have already bifurcated this section there. However, if you are seeing it for the first time, you can notice that line number 25, line number 26, they both talk about actual payments from the taxpayer. Line number 25 talks about taxes withheld. These are considered actual payment from the taxpayer. And line number 26 talks about estimated tax, which are deposited by the taxpayer by himself as advance tax, right? During the tax year itself. And then you have line number 27, 28, 29, and line number 31. They are talking about refundable credits. These are not the actual payments made by the taxpayer from his side, but these are assumed to be payments from the taxpayer side. These are kind of benefits which are provided by the US government, which reduces down the net tax liability and may also generate a refund for the taxpayer. The details of this are discussed with proper examples in video number 1 on basics of tax credits. And after all these adjustments, what you get is these at line number 33, you can see that they talk about the total payments, the total of actual payments and the refundable credit. And then in the next half of page number 2, you will find the final conclusion of all the above calculations. So if after comparing net tax liability with the actual payments, the taxpayer has a refund, it will be shown with certain other informations at the section of refund. And if it has certain kind of amount due on the taxpayer, it will show the amount due on the taxpayer. And then there are different things, signatures and the allocation of the payments and all the later formalities, right? And this is how the whole 1040 looks out and how all the items are positioned in the form 1040. Kindly try to remember at least the headings of income, deductions, and positioning, and the flow of these major items, if nothing else, right? This will really help you to summarize, to understand, to remember the provisions which you are learning in your part 1 individual of EAP.